Hey everyone, Ian King here, and welcome to your weekly Market Insights video. Joining me this week, I have Brian Christopher and Mike Carr, and we are going to talk about the presidential election season and what that means for the markets. And we're also going to address the most recent rally in Bitcoin, where prices have been up over 40% in the last week. But before I get started, I want to ask you to please subscribe to our video channel by clicking the subscribe button right here, and then click on the little bell after you hit subscribe if you want to get alerts on when we post a new video on YouTube. So let's get started. First topic we're talking about is the presidential election and what that means on the markets. You know, we were reminded that we're going to be an election year next year because the Democratic debates are happening this week. And I want to turn to my colleague, Brian Christopher, with some data on what that means for the markets. Brian, take it away.
Hey, Ian, nice to be here. So I was looking through some numbers, and specifically in election years, going back to 1928, the market was actually up in 19 of 23 of those years. So specifically what I'm talking about is 1928, 1932, 1936, et cetera, up to the most recent 2016. That's some big performance there.
Yeah, it's pretty good probability we might see another continuation of the most recent rally. What do you think about that, Mike?
I looked at some data and came to the exact opposite conclusion. So what I looked at was the decennial cycle overlaid on top of the presidential cycle. The decennial cycle being a 10-year cycle, largely grounded in business cycles. And in election years ending in zero, we've had 7 of them going back to 1900. 4 have been negative on the year. So more than half have been down. And every time it's been a down year, the incumbent party has lost the election. So my data shows a lot of potential for volatility next year, perhaps a down year, perhaps a upset in the election.
So Mike, it seems that you're bearish on the market and Brian has a different viewpoint here. You know, Brian, I'd like to start thinking about what do the Trump policies and what does the Fed mean for the markets this year. Maybe you can clue us in on why you think the markets might continue this rally this year based on what we're seeing out of the Federal Reserve.
Well, yes, in addition to the history where we have the average return in an election year of 13.4% versus almost a couple percentage points less in a non-election year, we also have a Fed that's looking to reduce rates. And historically, rate reduction has been a good thing. Making money cheaper has been a good thing for the stock market.
Yeah, except in 2007, because I remember the Fed started cutting rates in 2007, and I think that was one of the exceptions to that rule. But I do agree with you that the Fed on hold, or at least cutting rates this year, actually will lead to higher stock prices. What do you say about that, Mike?
I think eventually the rate cuts help, but it usually takes 2 or 3 to work through the system. So usually the Fed is behind the curve historically. Now, since Bernanke, the Fed has been following the market rather than leading it. So we're in uncharted territory with Powell's regime here.
Mm-hmm. Yeah, interesting times we live in. So I want to turn to the story of Bitcoin this week. And for viewers who haven't noticed, the price of Bitcoin is up 40% in the last week. It has reclaimed 10,000. It rallied as high as 14,000 the other day before a sharp pullback. And it's really not something we've seen since the height of the mania in 2017. And look, I'm someone who is an avid proponent of Bitcoin. I believe that it's going to be an alternative crypto or alternative currency to fiat currency someday. And I think a lot of the markets we're looking at right now will be decentralized by these kind of crypto assets. Now, Brian, asking you this question here, what do you think this means that the currency has just become so volatile in the last few weeks? What does this mean for investors? Could this be something more for the stock market? Or do you think that cryptocurrencies are kind of their own asset class where they're not really correlated with anything that's going on else in the world?
Well, historically, with some of my reviews of, say, natural resources and natural resource stocks, we've seen a move to kind of a risk-on move to more speculative assets. And historically, before Bitcoin, we'd see this with mining stocks, for example. There'd be a flurry of money into that sector. And now, in recent years, what we've had is kind of a combination of, say, gold stocks and the cryptos. And I would say in the last, a couple years ago, really kind of Bitcoin and the cryptos kind of overtook the resource stocks. Now, today, what we're seeing is a movement up, together. And will that continue? I mean, it's a good question, but certainly we have a market that is looking more favorably on these types of, speculative / maybe more risky assets, at what they seem to be at this moment.
Yeah, I think that's something Mike mentioned earlier about gold having rallied recently. Mike, what's your take on that?
Yeah, I think you're both right. I think, Ian, you see the Bitcoin and cryptocurrencies as an alternative currency. I think they're also an alternative investment. So whereas gold used to hold 10% of the portfolio kind of as an inflation hedge, Bitcoin's displacing that. Both are moving up right now. I think as investors around the world are turning to this alternative asset. Mm-hmm. And as far as the mining stocks go, I think we're seeing the Bitcoin miners reappear on the leaders list. Micron, WDC, and moving up sharply after strong earnings. And that's probably coming from mining companies.
Yeah, so we're seeing increased demand. One thing that I also want to note is that there's now $13 trillion worth of government bonds that are negative yielding right now. And, Brian, what is your take on the fact that you just can't earn any interest, especially in developed countries in Europe, on owning government bonds? I think the German Bund, which is their 10-year government note, is now negative 0.32 yielding per year. What do you think about that, Brian? How does that relate to natural resource stocks like gold stocks?
Right. Well, and we know that gold is a non-yielding asset as well. But when your competition, if you will, which in many cases is treasuries, is even yielding negative, that makes precious metals like gold that much more attractive. And we're seeing the money moving there today. In addition, we have this concept of lower yields here expected lower yields here in the States. So it's just from a relative perspective, gold becomes more attractive when yields go down.
So quick question on that. Should I be buying the gold ETF or should I be buying the gold miners? What's your take?
My take is we recently had a period where the mining stocks got demolished. So there is some value there still. Many of them have moved up, especially the producers have moved up, 10, 15% just within the last month or so. So there's a little bit less value there, but there is, dramatic potential upside with the miners because of the leverage on the gold price, and their tens of thousands or hundreds of thousands of ounces of production. Gold itself, a decent place to be, a relatively safe place to be. Not quite as dramatic of upside, but generally a little bit less volatility as well.
Yeah. And hey, Mike, technically speaking, have you checked any of these charts recently? Anything looking interesting? This breakout in gold, should we be buying now or should we be cautious?
Yeah, absolutely. Gold's on a huge breakout of a multi-year basing pattern, huge upside there. And I would be cautious looking at the gold ETF. Has some special tax consequences that tend to bite investors next April. So miners, much easier to deal with from that tax perspective as well.
That's great insight from both of you. So I want to thank both you guys for joining us today on Market Insights, and thank everyone for tuning in. Have a great rest of your weekend, and we'll be back here same time, same channel next week. Don't forget to give us a like if you like this video, and also subscribe to our channels. Thanks a lot, guys.